want you to understand that this is extremely important. All right. There's a reason why more often than not we see a lease in the exam. There's a reason why the examiner brings this more often, partly because it happens a lot in real life. It's not everybody who has the financial muscle to buy land or to build big buildings, all right? Some people, they need to rent from other people. So leases have got a lot of complexities in practice, especially now that we have COVID-19. We have seen a lot of issues around leases. So guys, I want you to understand that it's going to be something fantastic. It's going to be something that you need to pay attention, all right? Make sure you ask questions where you don't understand. So I'm going to keep it as simple as I can, all right? I'm going to keep it as simple as I can. So guys, let me now introduce you to this young lady here, and I'm going to give you a brief background of what this is about, okay? So let's go. Let's go, all right, so there we go. Mr. Banda, we've just muted him. It appears he's in a very busy place. All right, good. So guys, there we go. Evening, thank you. We're happy to see you. So guys, we're looking at a lease, right? Now, because I'm such a very nice man, like I told you earlier, I'm going to take you through a brief history of what this thing is, all right? What is a lease? Now, a lease has been covered under two standards. One of them is IS number 17, and the latest one is Ifrs number 16. So in the past, we worked with IS number 17, all right, to do with leases. So why did the examiner in his picket mind think that he wanted to change from Ifrs IS number 17 to Ifrs number 16? I don't know what picket means, honestly, all right? Hope it's not an insult. So Ifrs number 16 from IS number 17 has been an achievement. Why? Now, I'm going to give you a brief history here, guys. In the past, it was easier for all of us to swindle everybody. All right. You, as an accountant, you could just see one day on the WhatsApp, she puts up a report, a financial statement which does not show any lease liability whatsoever. All right. She just shows assets and blah, blah, blah. She looks good on the face of the SFP. So an investor comes, the potential investor comes, looks at the statement, they don't have debt. Well and good, let's invest. So the issue with that kind of an accounting was bad, partly because if you put a lease in the income statement or you account for it as an expense, all right, a liability, it was misleading potential investors. So people would invest in a company only to learn the company owes millions of dollars and kwachas in leases. And that was tantamount to fraud. All right. So in the past, IS number 17 did not show important things on the SFP. The lease was treated casually. It was as if nothing ever happened. All right. So now, to be able to make it better and to make it understandable, all right, the examiner and the ISP, of course, the ISP in their infinite wisdom, they decided to come up with a standard and they call it IFRS number 16. There's nothing special about the letters IFRS number 16, IFRS 16, nothing. It's just the same as the International Accounting Standard 10, IS number 10, whatever it is. It's just a code, all right? Just a code, all right? We have a different reporting standard, it's just a code, nothing special. So why the change? That was the reason why we have the change. So to avoid misleading the public and the potential investors or the users of financial statements who need to understand everything that must be understood in the financial statements. So I think that was one of the biggest issues also with the examiners adopting it as one of the examinables in the exam, because it's so practical. So let's get back into IFRS number 16. Okay. If you come to IFRS number 16 here, IFRS number 16 on the other hand is like, IFRS number 16 on the other hand is like a compensation, all right, like an upgrade. So what we have done here, Ifrs number 16 comes to resolve problems that were created by IS number 17. Ifrs number 16 is able now to show two things on the face of the SFP. It is able to show the lease asset, which is simply the right of use asset. When you pay for something in leases, it must be shown on the SFP. But also the liability also must be shown on the SFP. So IFRS number 15 shows two things. Number one, the lease, the right of use asset, and then number two, the corresponding lease liability. All right. So those are the two things IFRS number 16 is able to show, so that you are comfortable, you understand that, okay, fine, I'm investing into company, Mpande PLC. Mpande has leases right of use assets of 10 million. She has also a liability of 10 million or 17 million, whatever 9 million it is. Then you see it on the SFP. Sometimes there's a difference between the right of use asset and the liability, so you have to show all of them on the SFP, because sometimes you find that on the right, there are these attributable costs, and then on the liability, you just use the PV of payments. So sometimes there could be that minor difference, but either ways, you have to show those two. Okay. So guys, as you can see, this is a standard that is close to my heart. Okay, I love this standard. You call me at midnight, I'm gonna wake up and I'm gonna tell you every single thing about leases. So now, because I'm so fantastic, I'm gonna now take you into the definition of a lease. All right, step by step. What is a lease? All right. So we've been told here that a lease is a contract that gives the lessee the right to use asset for a period of time in exchange for consideration. So look at that. That's definition. A lease is a contract that is giving the lessee the right of use asset for a period of time in exchange for a consideration. 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 Do you know, guys, Ng'ombe Hilede? Who knows Ng'ombe Hilede here? Let's go back to history, guys. You know Ng'ombe Hilede? Do you know the constellation of Ng'ombe Hilede, guys? Who knows that? Ng'ombe Hilede, guys. Remember Ng'ombe Hilede? The form of constellation used in those days. Who remembers? Mr. Stambo. Ng'ombe Hilede, mnayebuksha.
Yeah, I think I can remember. Is the definition? Is it the direct translation? Something like the sleeping cow.
The sleeping cow, eh? Yeah. Do you know what used to happen around the Ng'ombe Hilede?
Yes, there was an exchange of
but
goods.
Just a bit sleeping cow.
Okay, so what was happening? You said an exchange of goods?
Yes.
Fantastic. So now tell me about the medium of payment. What medium of payment were they using?
Let me say, if maybe you have come with animals, and then you maybe need maybe mealie meal, there is that exchange where you say, my animals, I have 2 animals, I'm going to give you maybe 3 or 4 bags of mealie meal. That was some sort of exchange. You get what you don't have.
Fantastic. Barter system. All right. Barter system. All right. So you are doing well. That was Ng'ombe Hilede, sleeping cow. Fantastic. So now, when it comes to leases, guys, what people used to do under Ng'ombe Hilede is what we call a consideration. Only that now this consideration is a price you pay. In the past, you would not pay anything. Just come with maize, hoping to find somebody looking maize, and then you're looking for beans. You exchange maize and beans, and then off you go. Who cares? Yeah, that was a pretty restrictive. But now we do price, money, a medium of exchange, which is much more standardized and improved. All right, so we moved from Ng'ombe Hilede to now money. It's the same thing we did. We moved from IS number 16 to number 16 because it's more convenient. Just like money is more convenient than exchange. So now look at the definition. A lease is a contract. What is a contract? Now, In law, we did learn that a contract is an agreement between two or more people that creates enforceable rights, right? That is what a contract is. An agreement between two or more people. Let him come, it's okay, it's okay. Okay. Okay, thank you so much. You missed me. So now you can go, okay? Let him now. I'm with my plus now. Okay, now you can go. Okay, get this one, okay? Good. Yeah. All right. And then, so now, guys, if you look at this definition here, a contract is a legal binding agreement between two or more people, and it creates enforceable rights. All right, enforceable rights. So this brings a question to my mind, and I always say, because a lease is a contract, does that mean that every contract on earth is a lease? Because there are so many contracts, right? That's just a normal question. Does it mean every contract is a lease? The answer is a big no, but why? Because a lease contract is a special one. It's a different one from other contracts. We have contracts under Ifrs number 15, delivery from contracts with customers. We have IIS number 2, inventories, and several other contracts, all right? Financial contracts, under financial instruments and things like that. But this is a special one, it's a different one, because for a contract under Ifrs number 16 to qualify as a contract, it must pass 3 tests. So a lease contract has got tests it passes that qualifies it as a lease and distinguishes it from other contracts. So I want you to pay attention to the definition. All right, this is one of the things where I've been able to fraud my geniusness, because I was able to create a whole session from the definition. So I hope that you're gonna enjoy it. So let's go, guys. So what we look at the contracts here. For a lease contract to be able to qualify, first of all, these 3 tests must be met. For any contract, for it to pass as a lease contract, there must be an identifiable asset. What does that mean? It means if you're going to enter into a lease agreement, there must be a specific identifiable asset, all right, that has been mentioned in that particular contract. For example, if you're going to lease my vehicle, it should be mentioned. Contract between Shadrick Lusambo and Sonda Chembe, blah, 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 blah. There's a specific asset. You're going to list my tractor, and you're going to mention my the tractor in the contract. That is number 1. There must be an identifiable asset. Now, when we say there must be an identifiable asset, there could be 2 things here. One of them could be an asset that is explicitly identified. What that means, it means the asset is directly referred to in the contract. Contract between Shadrick and Musonda, right? Involving a tractor. Plate number so. Chassis number so. Right? Directly referred to in the contract. Sometimes the contract could be, please mute your speaker. Sometimes the contract could be referred to indirectly. If you come to lease my tractor, all right, and it's farming season, it only makes sense that we're entering into a contract because of my tractor, because you want to do something to cultivate the land, and I have a tractor. So implied means the contract only makes sense with the availability of a particular asset. If it's a tractor, all right, you hire some farming equipment from me, and it's a tractor. It just makes, even if I don't mention it, it's indirectly making sense, because rain season, you want to farm, and there's a tractor at my farm, so you've come to hire my tractor. I don't have to ask you which asset do you want to hire. No, because I know you've come for my tractor. All right, so express directly refers to. Implied, the contract only makes sense with the availability of that particular asset. Test number 2. For a contract to qualify as a lease contract, it must pass test 2. The customer must be able to get substantially all the benefits while they use the asset. What does that mean? Let's say I'm the lessor, all right? And then Musonda is the lessee. So the lessee, she comes to me, she says, hey, Shawty, can I hire your vehicle? And I say, you know what, Msonda, let's do it. All right. So we do it. She gets that particular asset. What do I do 2 days later? I call, I say, hey, Msonda, I'm so sorry. My sister is getting married. I'm going to need that car. I'm going to give you another one. Okay. I'm sorry. No, there's no contract. All right. So that hires my vehicle. She subleases it to someone else. I give her, what have you done? I want my vehicle back. There's no contract. There's no lease contract. A lease contract gives Msonda substantially the right to enjoy all the benefits while she uses that particular asset. That includes being able to sublease it to somebody else. We are going to talk about subleasing at a later stage in a much more better perspective. To sublease means she can get my vehicle. She can also hire it to some other person to be using it at a fee. It's a lease contract. Or she could use my vehicle as collateral because she has all the rights to enjoy the benefits. Or simply she could use my vehicle to enhance the value of other assets. Let's say I have a Ford, all right, and she has a Vitz. This is not to belittle a Vitz, just to use it for comparison purposes. Because a Ford is much more expensive than a Vitz. I don't have a Ford, by the way. Okay? Just an example. So I should get a Ford. I have a Ford. She gets my Ford. She puts that Ford in a yard. People will be going there to be saying, wow, Musonda's got money. She has cars at home. They see their Fords, you know. But when I'm a Ford, they just want Ford. So that Ford enhances the value of other assets at that particular place. Once you see a Ford, you know somebody's got cash here. Ford Ranger, man, there's cash here. It's not a cheap vehicle. It's over $60,000, all right? It's expensive. So you know that this guy has got money here. He drives a Ford. Usually people drive Fords are there for companies. Very few people can afford to buy Fords for themselves. So guys, that's what it means by enjoying the benefits. So if you can do that, then there's a contract. Test number 3, the customer must be able to direct how and for what the asset is being used. Now, this is the part I like. I have a Ford, all right? So when that comes to her to hire my Ford, we enter into this agreement. She gets my Ford, all right? Then she says, you know what? I think I love this dog. It's a family dog. She's lived with us for too long. I'm going to be using this Ford to take my dog to the vet. I meet driving that Ford with a lot of dogs behind. I'm not going to say, so what have you done? How do you put dogs in that Ford? Don't you let explain? I'm not going to do that because she has the right. She's given me a consideration. She's paid for that service, all right? So she can decide for what and how she wants to use that particular asset. If she wants to be using it as a taxi, nobody cares. If she wants to be, picking kids or whatever it is, nobody cares. So the customer must be able to direct how and for what the asset is used. I think that's fantastic, right? But here, common sense tells you something different. All right. There's a question I saw where the customer had entered into a lease agreement involving a plane, airplanes, plane. So the owner of the plane said, you know what, I'm gonna give you a pilot, okay, to drive you around, to fly you around, because I just want to be safe. I want to be sure the plane is okay. Guys, do you think that the owner of the plane was in order? Because the client refuses, no, but I've paid you. Why do you want to give me a pilot? Do you think it was in order? What do you think, guys? From what we are from explaining about the right to decide how and for what you use the asset. Do you think the owner of the plane was in order? What do you think? Sonda, what do you think? What's your take on that? What do you think?
Just my thought pattern. It sounds like it's a plus if the person did not have a pilot.
Sounds like it's a plus. All right. Fantastic. Mtara, what do you think? What do you think, Mtara? You're on mute.
Mr. Sambo, you said there are situations where a lot of people don't have expertise on, say, pilots. Not a lot of people know how to operate a plane. So you don't just give somebody the airplane, and just say you can go with it and use it. They have to know how to operate that plane.
Fantastic. All right. I think that's a good one. Guys, the owner of the plane was in order, partly because the client is not a pilot. Okay. So he tells him, you know what, I'm gonna give you my pilot. That is not in breach of anything, because what the client still has the same right. Look at number 3. The customer must be able to direct how and for what asset is used. Are you seeing? So even if he was given a pilot, he still could have been able to direct how and for what the plane is used, either to go to Solwezi every day, to go to Malawi, Kenya, Mbala, whatever it is, Chile, Poka in Mbala, whatever that is, all right, Senga in Kasama, whatever that is, they would have loved to do that. Solwezi, Mabanga, whatever that is, would have loved to do that. The pilot would not say, don't go, the pilot would just be taking the owner. Where do you want to go, boss? Take me to Malawi, let's go. Where do you want to go, boss? Take me to Samfia Beach. Off they go, all right? The customer would still have the rights, but giving him a pilot was for his own safety, because it was not a pilot. So these are the 3 criteria that must be met for a lease contract to qualify as a contract. That's number 1. Now, let's go, guys. This is the part where I like. Look at the definition. A lease is a contract that gives the lessee the right to use asset for a period of time in exchange for consideration. So we have said a lease is a contract. We've explained what a contract is. And we've said this contract gives the lessee the right to use asset, or of use asset. What does this mean? The right. What is that? See? Now, when we say the right, what we mean here is this. The right of use asset is simply a total of these. Number 1, the period of payments, the lease liability. How much are you paying? Number 2, did you pay any lease payments? Did you make any lease payments before the lease started? Number 3, any restoration costs, all right, that you're going to. Because sometimes you lease a farm and then they tell you, when you are done in the next 10 years, take it back to its original condition. Want things to be the way you found them. So you're going to incur those costs. You add them. Actually, this is a provision under S number 37. All right. Or initial directly attributable cost. What that means all costs that you're going to incur as a result of this lease agreement. Then you're going to add them. So a right of use asset is made up of these things. All right. Total cost of everything you're going to pay to enjoy this. What has Musonda paid me for what we want to enjoy all those benefits? Getting my food and putting dogs. Come on, guys. She must have paid me handsomely. Okay. So that's how you do the right of use asset. Right? It's like your benefit, total benefit. So because it's your right, the 100 here becomes your right, because that's what you are paying to enjoy this service. All right. So now there's something here. Look at that. This right, and this is a contract that gives the lessee the right to use asset for a period of time. Can you see the definition now, Rich? It is, there's a statement for a period of time. What does that mean? That means this right will not last forever. It has a deadline. That deadline is what we refer to as the lease term. Lease term. Can you believe that? Fantastic. The term of the lease. The lease term. The lease term, guys, is extremely important, and that don't be overly emphasized, partly because it is the lease term that determines the lease liability. If the lease term is 10 years, and then rentals are 10,000 kwacha per annum, obviously you know that 10,000 kwacha times 10 is going to give you something more, right? 10 times 10, guys. All right. So you're going to understand how much you're going to pay. If the lease term is 5 years, then those are 2,000, 2 times 5. So the lease liability is always based on the lease term. Don't miss this in the exam. Right? So the lease liability is equal to the PV of payments, right, in the lease term. So you may be wondering, I say, but how is the lease term calculated? Because in the exam, at this level, you've got to know how to calculate the lease term. A lease term is simply the period of the lease. So this period of the lease has got periods within. For example, there's a period which can't be cancelled. That is 1, you add that one. Number 2, an option to extend if reasonably certain to take up the offer. What does that mean? It means, let's say, there we go. Let's say, I'm going to change some names here. Let's say we have, I'm going to remove this one. I'm going to say, let's say we have Chembe, all right? And of course, let's say we have, we have Chitambo here, all right? Fantastic. So how is a lease term calculated? A lease term, let's say they've entered into a lease agreement, okay, for 10 years. The lease term is 10 years, all right? 10 years. What does that mean? It's going to be paying rentals for 10 years. But again, Chembe tells Chitambo, you know, Chitambo, if you want, you can extend for another 5 years. Now, Chitambo has a choice, either to extend for 5 years so that it can be equal to 15 years in total as the lease term, or it could simply say, you know what, thank you so much, but no thanks. Nobody cares. It could do something like that. Now, what helps Chitambo to agree to an extension is whether it is reasonably certain. All right? What does this word mean? Reasonably certain. We're going to talk about it later. So the last one is a period covered by option to terminate. Again, if reasonably certain. Sometimes you can say, you know what, once the lease is signed, you cannot terminate within the first 4 years. That means that 4 years is part of the lease term. You can't do anything about it. Let's talk about this word, reasonably certain. Guys, in financial reporting, the word reasonably certain means something else. Okay? It means something else. It means that number one, right? When we say reasonably certain, it means market conditions are allowing. Chitambo has seen that there's going to be business, all right? Or for example, if what Chitambo got was a tractor. Chitambo knows he's going to be in farming for the next 5 years, 10 years, 20 years, and there's business. Chitambo can say, you know what, I'm going to take up the offer because Chitambo has seen that there's going to be business. So the lease term changes. The moment Chitambo accepts to extend, it changes from 10 years to 15 years. If Chitambo declines this one, it still remains 10 years. We're going to do an exam question here, all right? But again, sometimes it could be maybe the lessor, Chembe here, has promised Chitambo some significant leasehold improvements, and then Chitambo is impressed, all right? Something like that. Okay, and then sometimes it could just be that there is something that contractually obliges Chitambo to extend the lease. Okay? Yeah. Okay, so like we have said here, reasonably certain mean make market conditions favorable. I think I'll put this one here for your understanding, my bosses. Okay, there we go. Okay, that is what reasonably certain mean. So I'm just going to do something like that, of course. Again, for your understanding, my bosses, so that we can just look at that like that. So market conditions are favorable, that's okay. Significant leasehold improvements have been made, yes. High cost to terminate the lease. Sometimes it's difficult. Leases have got high cost. They're like onerous contracts. The cost to terminate are more than the benefit to terminate. So in the end, you keep paying rent, but don't use the building. But the penalties that are associated with terminating are quite huge. All right. The asset, remember the time COVID-19 came, a lot of people are paying rentals for buildings they're not using, even when they're on lockdown. Do you know why? Because of penalties to terminate. Number 4, the asset is very important to the lessee, or specialized, customized to the lessee. Then you can say, you know what? The lessee will not find this asset anywhere else apart from here. So we know they're going to extend it. That's what it means by reasonably certain. All right. So we are still on the lease term. Remember what we are saying? We are still on the lease term. What is the lease term? The period of the lease. It is made up of the period that can be cancelled, an option to extend, period covered by option to terminate, and this cannot be done when it is reasonably what? Certain. What does that mean here? So now I'm thinking here and I'm saying, okay, fine. So it is difficult to terminate a lease contract. Does that mean it is impossible? The answer is no. There are situations where the lease term is reassessed. So you know what, guys? I think enough is enough. We've done enough business. Let's sit down and do it. This is extremely rare, all right? It's very rare, but it's possible, okay? It's very rare, but also very possible. So here, there are 3 ways in which a lease contract can be reassessed. Number 1, when the lessee exercises or not an option in a different way than previously was reasonably certain. There we go. Let's say here, Chitambo told Chembe and said, you know what, Chembe, business looks good. Bring it on. I'm going to take up the option to extend for 5 years. So the lease term goes to 15 years. All right. Let's say when they were starting, Chitambo was sure there was no business. So he simply said, you know what, 10 years. 10 years, 10 years, 10 years. 6 years down the line, business improves. Chitambo calls Chembe and says, you know what, please mute your speaker. 2 years down the line, 6 years down the line, Chitambo calls Chembe, I think I'm going to extend the option. That means the lease term is going to be reassessed. All right, from 10 now to 15. Okay. Sometimes when something happens that contractually obliges the lessee to exercise an option. Here's the issue. What if, let's say in this context, Tambo is the owner of the lessee, right? And gives it to Chembe for 12 months, for 12 years, right? And then after 12, with 6 years down the line, what does Chembe do? She subleases the asset to someone else. For how many years? For 12 years. Have you seen? So now, Chembe has used 6 years already from the lease. She's remaining with 6 years to go before she can take back the asset to Chitambo. But the problem is that now she has also subleased to someone else for 12 years. That means if the 6 years elapses, the asset is going to stay with someone else for another 6 years. But the problem is Chitambo will get this asset back. So the only way Chembe can survive is if she goes back to Chitambo and say, you know what, I've subleased the asset to a client for 12 years, so I'm going to need to extend the contract for another 6 years. Because if she doesn't do that, the client is going to sue her for breach of contract. And she's going to pay more. Okay? When something contractually obliges the lessee to exercise the option. So that can happen. And then other times is when COVID-19 happens. Okay? When something significant happens that affects whether it is reasonably certain to exercise an option or not. Okay? This trigger is only relevant for the lease, for the lessee and not the lessor. So the only one who can extend here is only the lessee, not the lessor. Because the lessee is always paying rental. So the lessor can say, no, what, lessee, I want you to extend to 10 years. You pay me for the next 10 years. No. It is the lessee who have the right to say, you know what, my landlord, I'm going to be able to pay for the next 20 years or 50 years. Because they're the ones with the money. Right? COVID-19 comes, can disturb a lot of things. That is significant. We saw lockdowns. A lot of these agreements were affected by COVID-19. Remember, guys, we are going into a recession. Okay, so be careful how you spend your money. Okay, let how you spend your money reflect that you are somebody who thinks about the future, not just the now. So, guys, that was, of course, about the lease term. So, see how I have unpacked the definition in such a way that you are going to find it easier to remember the whole lecture from just the definition. Took me time to drop it in this manner, but I hope you find it interesting. So guys, a lease is a contract that gives the lessee the right to use asset for a period of time. Look at that, in exchange for consideration. What does that mean? Consideration, we talked about ng'ombe ile. In the past, we could do barter system as a medium of exchange. Consideration simply means liability. So how do you value that consideration? All right. The consideration, which is simply the liability, is simply the present value of the lease payments. The payments, the rentals you are paying, is it for 10 years, for 5 years, for how many years? Can you total up those things? Right? Whether these are fixed payments, whether they are variable payments, that's if they depend on an index per rate. We're going to do a price consumer index, possibly in our next class. Whether it's residual value guarantees, payable purchase options, or termination penalties, all these added together, they're going to form up what is called the lease liability. Any fixed payments, any variable payments, any residual value guarantee, any purchase options, any penalties to terminate because it's a cost. If you're going to terminate, you're incurring a cost. You're supposed to pay it. So you're going to add that to your liability. Okay, so that's how we do it. So now, guys, because I'm such a very fantastic man, I'm going to take you back here to the definition. See what we have, how we have unpacked the definition. What is a lease? A lease is a contract that gives you, the lessee, the right to use asset for a period of time in exchange for consideration. So the reason why I developed this lecture from a definition was to help you remember things easily. You don't have to master everything, but master the definition, because you're going to know there's a contract, there's the right of use asset, there's a period of time, there's consideration. What is a contract? What is the right of use asset? What is the period of time? What is the consideration? So all those important things have been embedded in the definition. And in my infinite wisdom, I thought it fit to use the definition to develop the important concepts of the lease agreement. I hope that this helps you to remember things easily and in a much more effective manner. All right. If you forget, just remember the definition. Then you begin to see there's contract, there's right of use asset, period of time, consideration. Then you think about those. You're going to remember everything. I can assure you that nobody forgets this method. Don't do the first one. So guys, now let's do an example. Simple example, and then we're going to move to an advanced example. All right. We're going to do a simple example, then we're going to move to an advanced example. The advanced example is going to contain a lot of calculations. Okay, just so you know. Let's say there's a 3-year lease. A lease term has got 3-year lease term. Annual payments in are 5,000. Interest rate is about 12.4%. The PV of payments is about 12,000. This is the information that the examiner gives you. We have a lease term for 3 years, right? The rentals in arrears are 5,000 per annum. The interest rate is about 12% per annum. The PV of lease payment is about 12,000. Right? You've been given this information. Then the exam says calculate depreciation, interest, current liability, and non-current liability. This is a very easy question, all right? So we are going to do it. Remember, guys, that the lease liability is initially the PV of future lease payments. The lease liability is simply the PV of future lease payments. So here we have been given that 12,000 kwacha is what is the lease liability. This is the PV of future lease payments, right? So the double entry is going to be, we're going to debit asset by 12,000, and liability by 12,000. Because the standard average number 16 wants us to show two things on the face of YSFP: the right of use asset and the corresponding lease liability, right? So now here, once we do that, we are going to now depreciate the asset by how many? By 4,000 per annum, because the lease term is 3 years. To get depreciation, you always use the lease term, not the economic useful life of the asset. The economic useful life of the asset can be 20 years, but the lease term can be 15 years. So your DIP is based on the 15 years, the term, how long you're going to be with the asset. Don't depreciate using the whole or the life, unless if the examiner says they're going to use all the economic useful life, then yes. So what is the DIP? So we now know here that the DIP is about 3,000, okay? So we have worked out the DIP. How about the interest? So simple format. We're in January to December, all right? January to December. And you've been told you are paying when in arrears. That means you're going to shift in January, moving to this house, right? You're going to pay rent when in December. But the only problem, you are paying in arrears. So if you're going to pay in arrears, there's inflation. Inflation is simply the rate at which money loses value. The rate at which money loses its buying power, right? So the landlord understands that. So the landlord says, you know what? You're not going to swindle me, Chembe. I know your plans. You're going to pay me in December. I'm going to charge you interest. Because that is the only way your landlord can add value to that money. But because the money giving it to you today is better than giving it to you next year, because next year it won't be able to buy the same things it can buy today. So you won't add value to money by charging interest. Okay, that's important to remember. So we are paying interest. Now notice, guys, when the examiner gives you that you are paying in advance, the situation is different. We're going to swap things around, as you're going to see in our next question. Okay. So here we know that the year, we have 3 years, year 1, year 2, and year number 3. Okay. In the exam, guys, let me just make this comment. In the exam, just do for year 1 and for year number 2, all right? But because in the exam we are simply looking for the current liability and non-current liability. Current liability this year, non-current liability next year, period. So the PV of payment, or simply the cost, in other books, they say this one, the cost of this is 12,000. Since you are paying in arrears, the landlord charge you interest. We charge interest of how much? 12.04% times 12. Your subtotal becomes how much? The interest is about 1,445. This plus this, we have 13,445 as the subtotal, right? Then you are paying rentals when? In arrears. How much are you paying in arrears? 5,000 kwacha, right? You are paying an amount of 5,000 kwacha in arrears, okay? So what do? You're gonna remove the 5,000 kwacha from which one? From the 13,445, and they're going to remove the total liability of how much? Of 8,445. At the end of year 1, you're owing your landlord how much? 8,445. Please mute your speaker. 8,445. Okay. At the end of year 1, that's what you're owing. So because tomorrow, because today is the last day of the year, December, when you wake up tomorrow morning, you'll be in year number 2, you still wake up with the same date, 8,445. All right. Now remember, you're charging interest of 12.45%, 12.04%. You have that amount. This plus that, your subtotal is how much? 9,462. Remove your rental at the end of the year of 5,000 kwacha. The balance on the liability is going to be how much? 4,462. Because you're in December, the last day of the year of the month, what do? You wake up tomorrow morning to be a number 3 with the same liability. You charge interest of 2.04%. Total amount comes to how much? To 4,999. Okay, simply 5,000 because of rounding off. Then you remove the rent of how much? 5,000. How much liability do you have? 0. Okay, so I just included the last year here to just show you that the lease is going to end at some point. You don't need to include the last year there in the exam, okay? In the exam, there's no need to include this last year. In the exam, just do these two here, okay? Just do these two. There's no need for you to include anything else in the exam. Just do those two, okay? So in the exam, you can only do those two, okay? Just those two. No need to include the last line, because what we are looking for in the exam, we're looking for which one is our depreciation, 4,000 kwacha per annum, all right? Which one is our interest rate per year? So you're going to know the interest for the current year is going to be which one, you know. Which is going to be our non-current liability, you know. All right, so we're just looking for those things in the exam. Otherwise, in the exam, do not include this one. We just wanted to know the total liability at the end of the year is this one. This is the amount of money you're pushing when up to the next year. There we go. All right. So we're going to add interest, and the subtotal is that one. We remove the interest. The total liability by the end of year 2 is going to be how much? That one. So now you know which one is going to be non-current liability and which one is going to be your current liability. So in our next question now, we're going to do now a much more detailed question. We're going to fish out now the current liability, non-current liability, interest. So I'm going to be showing you this number is interest. This number is non-current liability. This number here is interest. This number here is, of course, what? The current liability. Now the problem is this. This 5,000 kwacha, guys, contains what? Interest inside, because you are paying in arrears. So this 5,000 kwacha contains what? Interest inside. So how much could you have paid if you paid without interest? So you must subtract interest from the 5,000 kwacha so that you can get the amount that you need. Don't forget that. This 5,000 kwacha contains interest. All right? Don't forget that. The 5,000 kwacha contains interest. Yeah. So I'm going to give you an exam question now. We're going to do that one better. Okay. So let me give you an exam question now before we go any further. Now, this one is going to be more involving than this Dongologic stuff we've been doing. Okay. So I'm now sending this one to your WhatsApp. You know what? Sending this to WhatsApp, guys. Yeah. Sending this to your WhatsApp. Okay. Sending this to WhatsApp so that you guys can look at it. We are going to like this one because it is such a very relatable question. It's a very famous exam question, and you guys are going to love this. Okay, let's go. Leases. Okay. No. All right, let's see. Defeats, okay.
Mr. Sambo, what did you say about the 5,000 that it has interest if we're not paying in arrears?
You are paying in arrears, you are paying rent. This 5,000 you are paying at the end of the year. All right. They'll charge you interest. It contains interest. So the current liability is going to be, you get this 5,000 kwacha, you remove interest. All right. Because it contains interest. Your current liability is not 5,000 kwacha, no. Remember, you are paying interest of 1,445 this year. All right.
Yes.
And then what is your rental amount? 5,000. If you pay 5,000 and then you also pay 1,445, you are going to overpay by 1,445. The reason why you are paying 5,000 at the end of the year is because you are paying in arrears. So your landlord is charging you what? Interest to add value to the money. So you're supposed to remove interest from the liability to get from the rental amount to get the total the liability. How much could you have paid now? If you paid now without interest, how much could you have paid? Because remember, interest is an expense. And also you're also paying 5,000. So it's supposed to remove the interest. Is that okay?
What about the interest that you already removed from the 12, Ms. Elsam?
Which 12?
No, you added the 1,445 to the 12,000.
Yeah. We added.
So meaning
what's the
interest
problem?
has already been added. So why are you removing again interest from the 5,000?
Oh, okay, I see. Yeah. Interest has not already been added, okay? Is that okay? Interest has not already been what? Been added. All right. This interest is what you are going to pay. All right. Remember, your rental amount is 5,000. So you want to understand from this 5,000 how much is going to interest, because you are paying at the end of the year. It contains interest inside. So how do you know? The total liability is 12,000. And you're paying in arrears. So you're going to say this 12, you multiply by 12.04% to get the interest amount. The interest amount is 1.4. So you add this interest amount to the total liability, comes that amount. Then you remove how much, what you're going to pay in total, which is the 5,000. You're going to remain with 8,445. That's okay. But you're supposed to split to know this 5,000, how much is specifically for rent and how much is specifically for interest, because we are being charged interest for paying late. So how much is the actual figure if we paid early? How much would it have been? Because if you are paying in advance, this interest could not have been here. What could have happened would have been, you wake up today in the morning, you pay in advance. That means you're going to pay before you shift. Remember, you are paying after you've shifted here already. But if you are paying in advance, you could have paid before you shift. That means before they charge you interest, you pay. So the liability could have been different. It could have been the actual amount you are paying now, because you are paying before you move into the house. But this time, you are paying after you've moved into the house. At the end of the year, that's when you're paying rentals. Are you okay with that? Remember, you are paying rentals at the end of the year, after you've moved into the house already. So the landlord is saying, "Not, I'm losing money. So the only way I can add value to my money is if I charge you interest, because you are delaying me." All right. Are you okay with that?
Yes.
Really? Yeah, sure. It's the same concept we did under IS number 37, where we said when you are paying in advance. Yes. I'm looking for a question. When you are paying in advance, it's different because you are paying in advance, but you are paying in arrears.
Okay.
It's a whole different story because you are paying in arrears.
Yes.
Yeah. All right.
Yes.
So
Awesome.
okay, fantastic. So I'm looking for a question. Yeah. Okay. All right. So guys, I'm gonna send a question to you on the group as an assignment, and we are going to work around it. Okay. In the meantime, it appears I can't see the question, but I'm gonna find it soon. And once I do, I'll share it on your group. Okay. Okay. Maybe wait a bit before I go, just in case I think I'm gonna find it. Let's see. Very close to this. There are lots of documents here. Yeah. Okay. When you're alone, you are seeing these things. When people come, they disappear suddenly. Yeah. Okay, so. Oh, okay. Good.
So, Mr. Lusambo.
Mm-hmm. Yes, sir.
Hello. Yes. So let's say if we were paying in advance the 12,000, we could have be paying you could have split the 12,000 in 3 years and pay 4,000 as rentals each year.
It's simple. It's simple. Let's do this. Let's say you're paying in advance, okay? If you are paying in advance, what could have happened is this. You could have had the year here, all right? You could have had the rent here, all right? And then you could have had the subtotal, right, here. And then you could have had where there's rent now, that's where interest goes. You could have had the interest at the end, and then you could have had the liability at the end. What could have happened in year one? Since since your cost in year one here, remember your cost here, which is simply your cost, is about 12,000, right? In year one. What you could have done in the morning, just waking up, you could have paid rent before you shift, or 5 before shifting to the house, which means you could have remained with a 7 here. And then when you charge interest of 12.04%, how much could you have had? Right, so that's 7. You would have multiplied by 12.04%. That could have given you 8428. So you could have closed with about 8428 here. See the difference? Here you're closing with 8445. Yep, Sana. Here you're closing with 8428 because you're paying the arrears in advance. The liability could have been different. So the current liability could have simply been how much? 5,000 direct, because that's how much you are paying right now. The interest could have simply been how much? Would have simply been how much is the interest? Oh yeah, the interest could have been 0.8.8.4, and then the total could have been this 7 plus the interest. All right, this I would have said plus 0.7 plus 0.7. It could have been about 15,428, whatever that is. So the total could have been reduced. If this was supposed to be 7,000, all right? 0.04%, okay? You would have had 842 as interest here. So you would have had 842.8 as interest. And then you would have added that one to 7,000. So total could have been how much? 7,842, right? Or 43. 7,843. Should round it off. Get here liability. Look at that one. Liability is how much? 8,445. The reason why the total liability at the end is bigger is partly because they are paying in arrears, so they are charging you interest at the end of the year, so the liability becomes bigger. But if you are paying in advance, the interest is being charged on a small amount over 7. Here, the interest was being charged on the big amount, the 12. Are you okay with that? So the current liability, what do you have to pay me right now? What is current? What is current is 5 right now. How much is the interest for this year? 842. That's the interest for this year. Nothing to subtract because that's the actual interest. This interest is not being added into the 5 because there's no relationship. But here, on the other hand, this interest, you're not paying it now. You are paying a rentals at the end of 5 years, because remember, the lease term is 3 years. After 3 years, you're going to have no money to owe this person, right? If you are going to say you pay 1,445 separate, then you pay 5 separate, you're overpaying. Because after the end of 3 years, you're supposed to have 0, so you're going to overpay. So just know, okay, this interest I'm not paying now. So because I'm being charged at the end of the year, that means my rentals contain interest inside already. The examiners already added interest inside the rentals. Like a deferred payment, it contains interest. They've added time value of money. I bet you guys done financial management. All right. So I hope that helps. Are you all right with that? Are you okay? So
yes,
even the non-current liability now changes, because now you are at the end of the non-current becomes which one? Becomes different. All right. The current liability is that one. All right. That kind of you're going to, tomorrow morning you're going to wake up, you're going to have year number 2, and then you're going to wake up with 7, 8, 43, all right? 7, 8, 43. Then you remove what? Remove the 5 now, and then you're going to, whatever you're going to remain with there, you remain with it, then you go all the way. You're going to see again, after the end of the 3 years, it's going to do what? It's going to be removed. So that would have happened, right? Yeah. So that is just what could have happened, guys, if you are paying in arrears, in advance. Okay, that's what could have happened. But because it's not in arrears, yeah. So I'm gonna send a question on the group. I'm gonna send a question in the group, but because I can't see it now, I looked at it before I came. Now where else is there? Okay, fantastic. So guys, I'm gonna send a question in the group. You have to understand this point I'm making here. If you are paying in arrears, you are paying interest at the end here. You've shifted into the house today, you've not paid anything. Why would landlord let you pay him at the end of the year for nothing? Why? He's going to charge you interest at the end. That means you're going to pay more at the end. But if you pay now, before you shift, it means there's no interest to accrue. The actual current liability is the actual rentals you're paying right now. But if it's in arrears, it means that rentals at the end of the year, the landlord already put interest inside already because they're paying at the end of the year. It contains interest already. So your job is to come and separate the actual rental amount and the interest. So just assume every time you pay in arrears, the rental amount contains interest inside, or to take it out to make it easy for you. Okay, guys. So guys, this marks the end of tonight's session. I must tell you. Yeah, marks the end of tonight's session. All right. Yeah. So tonight's session has been you know, Eris. So guys, tell me, any questions, any contribution? Are you guys enjoying yourselves? You know, I think I'd like to find out from you guys. Are you guys enjoying yourselves? Really? Everything okay? Any questions? Any contributions, guys? Guys, are you guys all right? Everything okay? Any question?
Yeah, okay, Mr. Sam.
You're sure you're fantastic? Are you sure?
Yeah.
Fantastic. Msonda, are you okay?
Yes, I'm okay. I'm okay.
Okay, Mr. Tam, do you want to clap for me or want to clap for me? I don't mind. You can clap for me if you like. Eh? Who wants to clap for me, guys? Nobody wants to clap for me. Are you guys haters? Really? Yeah. Yeah. See, I'm such a genius. Can you believe how we have explained this list from the definition? Remember the definition. That's the only thing to remember for tonight, from tonight's session. The definition alone tells you everything. Okay. So fantastic. We'll do an exam question in our next class when we meet. A much more serious question. So guys, I'm gonna go, to enjoy myself. Thank you so very much. Those of you are still, let me stop recording, then I make this comment. Right, let me say, where's the recording part? Okay. I've stopped recording.